Hey everyone, if you don't know, my name is Jon Barnato. I'm the broker here, been in business about 14. Welcome everyone and those online too. So today we're doing financial basics, which is one of my passions. I believe you got to have financial basics before you can actually have wealth. So, and our goal, right, in real estate is to build wealth, I imagine. That's all our goals, right? So here we are. Let me go forward first. I will say one thing, and this is going to not really relate to wealth, but one thing you're going to want to have if you really want to build wealth and in real estate, you're really going to have to be intentional with your business. There's a book called The 12-Week Year, which is a book about being intentional with your goals. So we all set goals. I want to close 12 deals. I want to make $100,000, all those things. And it says those goals are hard to attain in an annual setting because a year from now, if I said you got to finish this by December 31st, most of you are going to be like, oh, I got time, I can work on this. And you don't have urgency to your goals. And the 12-week year really says break your goals down into 90-day sprints and really do it in a 90-day sprint. And most people are highly productive that way. Think about when you're in a job and you're going on vacation, you had a bunch of work, you just plowed it out. And what if you were 75% that efficient at the time, all the time? How much business would you have? How much would you be doing, right? So, and actually, I even got this. In fact, it's not even KW, but it's called Bigger Pockets. But Randy Turner, someone I follow, he's a big real estate investor. He has an intentional journal, and this whole book is 90 days, weeks, and days, just 90 days.
Is that the same guy with the Bigger Pockets podcast?
Yeah. Yeah, it's good. So he has an intentional journal that's just, this whole book is just 90 days, and literally you write in it daily just to keep your focus that focused, right? And if you can get to that, you'll see well. So I'm guaranteed, well, as long as your goals are the right things. So. All right. We're doing a financials class because often agents, a lot of times they do the business and then they figure out the finances later. And by the time they figure out the finances later, they have a fat tax bill and they don't know what to do, and then they don't pay it. And then I've had agents 2-3 years down the road not pay their taxes, not file their taxes, and then we have to go back and fix things, and we're getting letters from the IRS saying we got to garnish your commissions, and we want to avoid those situations. So we're going to talk about what it means to do your finances in remember, what success is do every day. As Luke was talking about, you need to do your lead generation. If you have no clients, it's because you are not doing lead generation. I can tell you that much. And you need to run your business, market, sell, listings, show buyers, negotiate contracts, transaction management. So this should be in the morning. This should be in the afternoon. So if you do those things, that is your business. And if you can do those things with regularity and consistency, I guarantee you'll have success. All right, we're just going to talk about perspective now. So there's habits that you must have for a financially sound business, and I want to stress you are a business. You are a 1099 independent contractor, so the government, the United States government considers you a sole proprietor business on your own. Even though you hang your license with us, they consider you a sole proprietor. You are your own business, so you need to have financially sound practices for your business. I can tell you, don't learn this the hard way. I learned this the super hard way, to the note of losing like 6 figures in money. I would not recommend going that way. So I'm here to teach that class so that you have financially sound habits. So set a profit goal that funds your big life and pursue activities to achieve it. You will never have great success in your real estate business unless you pick a number that is tied to a big why. And I'm going to say that. So you got to, and your big why can be immediate. If you got a bunch of debt and you're like staring at this and you're like, wow, I need to just do this, your big why can just pay that off, right? If you're more financially sound, it could be, I want to buy a house. It could be, I want to invest in property. It could be, I want to fund my retirement. I want my retirement to look like this. It could be, I want to really open a nonprofit and do this. That's fine. It doesn't matter what your big why is, but you need to have a big why, and you got to put some thoughts around that. How much is it going to cost to do that? what am I gonna have to have in place? What assets, what passive income? What are those things that need to happen for you to have a good focus on your wealth? I guarantee I've never seen anyone build extreme wealth without a good focus on it. Now, what I mean by wealth is, you can have football players, how many seen football players get wealth right away, or they get income right away, but then their careers are over and they're bankrupt, right? So that's not having wealth, that's just having income, right? So the idea is, how do I build wealth? And when we talk about passive income, right, to fund your big life, is how do I have assets that produce income for me that I don't actually work on day to day? That'd be like rentals. That would be businesses maybe that you own, but you don't run the business, right? So think about those things that help you get passive income. Stocks, bonds. Okay. Number two, we're gonna do estimate and save and pay your taxes on time. So you should have a structure for every commission check you get. You should be parsing that commission check on a formula that is designed to pay your bills, pay your taxes, and have your income that you want for your household. And we're going to talk about that in more detail, but you should have a formula. I can tell you in my real estate business, literally a commission check comes in, it is parsed to the percentage. I literally have percentages for several things, and it's parsed and percentage, and even the taxes. I even send the taxes to another bank that I don't even have a bank card for, so I can't even touch that money. That's how diligent I am with my money, because I know myself. I know if there's a $20,000 of tax money sitting there, and I see a potential investment, I'm like, oh, that's no big deal, and I take the money. And next thing you know, that investment goes bad or something, or I'm screwed on taxes. So make sure we're going to talk about that as well. You should use proven models and systems for your MRE chart of accounts. You should have a separate bank account for your business, even if you're a sole proprietor. Now, the government allows you to mix, because you're a sole proprietor, it allows you to mix your personal and business income together. That means, what does that mean? That means they don't see any money you make in commissions to the government, to the IRS, I should say, is not seen as separate from your personal finances. Okay. Now, that's just starting out where you guys are. So once you get bigger and you open a corporation, then it's going to separate. That means the income to the corporation is seen as separate from the income to yourself, right? So we're not there yet, but we're going to talk about that. But what you need to do is get in the habit of treating your business like a business. So I would recommend setting up an account that is separate for your business. Actually, I would recommend setting a checking and a savings account for your business. We can show you what I mean by that here going forward. And you should have some sort of accounting software. Now, there's a bunch of free stuff out there. My business uses Wave apps. You can use Quicken, QuickBooks, all those sort of things. But I recommend you use, there's a chart of accounts you want to use, so that when you go, if you input and you want to do that monthly, I should say, so that when you have your taxes at the end of the year, instead of scrambling and trying to go to your bank account statements and parse everything out for your tax person, you can just print out a couple reports, give them to your tax person.
What is it called, the one that you use?
Wave apps, like waveapps.com. It is a free version. There's a free version. You only pay if you do payroll, but you're not going to pay.
So you do mileage?
You can do mileage. There are apps as well. Yes, I would track your mileage as well. There are apps. I know Quicken or QuickBooks has an app that tracks your mileage as well. But there's a bunch of mileage apps out there. You want to be able to track your mileage as well. That will be important for taxes.
Which one do you use?
For mileage, I actually don't claim mileage, so all my business.
What if you could recommend one would be?
The one that I've heard the best is the Quicken one for mileage, or QuickBooks one for mileage. So, but there's a bunch. I have agents using a bunch of different ones, right? So, but you want ones that are going to be able to like turn it on when you leave the parking lot. You get there, turn it off, or if you're just doing showings, you turn it on. When you get back to the office, turn it off, right? So you want something like that that's just going to track your mileage and time and with GPS. So and there's a bunch of apps that do that. So and then at the end of the year, I'll produce a report for you. And, right? And just so you know, some of you would be like, I have my car and I put 20,000 miles on it this year, and I'm going to claim 20,000 miles. if you get audited, you're gonna be screwed, so I'm just gonna say that. So it's, because you're using your car for personal and business expenses, just note that it's gonna be some percentage of time. If you track your mileage, you'll have literally the proof to give to them. But just note that if you didn't track your mileage for last year and you still have to file, you can do some sort of guesstimate. I would say just guesstimate your travel time, 50%, 75% of the mileage or something like that, if you know. Hopefully that will hold up, but you really want to track your mileage as well. So, and we'll talk about the proof of track. You want to be savvy about reviewing your financials monthly, which is number 4. All right, what does that mean? You should be able to produce a profit and loss and a balance statement, more importantly, profit and loss for your business every month, and you want to look at it because in the end, you're here for profit, right? So there's no point in doing a business profit. And I know some big agents that do a lot of business and they talk really well, and then if you looked at their bottom line, they're not showing a whole bunch of profit. And I'll tell you what, you're never going to build wealth or have investments or all those things unless you're doing that. And then you want to pay yourself a salary. You want to make sure that you are paying yourself a certain amount of money outside of that every time you get a commission, so that you are getting paid. And once you have a corporation, eventually, you would actually formally have payroll, like a W-2 job on your business, and you pay yourself payroll for extra tax savings. But we can talk about that at the end. And then prepare now for a financially secure future. If you build these habits, when you actually have a big business and this structure in place, it's really easy to start a corporation because you already have all the chart accounts. You know what the things look like. The P&L looks like. All those things. You know how taxes work, so that you can just start a business. So on the bottom on page 3 there, we're going to ask you, money is good for the good it can do, according to Gary Keller. What is your purpose of your business? So I want you to take a second and say, what's your big why? If I said it was this purpose, and we talked about it in depth, you would actually start tearing up and say, man, that would make me get up in the morning and want to do business. What is your big why? What is your purpose of your business? Actually, what is the purpose of business in general? Anyone know? What's the purpose of business?
To make money?
Close, yeah, to make money, yes. It's profit. The number one thing that is important in business is to make profit, and that's what we're going to talk about today. So we have 2 scenarios. If you go to page 4 in your handout, there's 2 scenarios, financially sound or unsound. We have number 1. New agent Jessica earns a commission of $9,000, and after paying her broker, she received checks an amount of $5,760. She deposits it into her personal bank account to pay her personal credit card debt and household expenses. Number 2, new agent Jessica receives a check for $5,760 and deposits it in her business bank account to cover business expenses. She pays herself a salary of $4,032, which goes into her personal bank account, then transfers 40% of her salary to $1,613 to her personal account for her tax savings account. That leaves Jessica with $2,419 to pay household and living expenses. So this is an exercise. Which one do you think is sound and why? Which do you think is unsound and why?
Well, right. You are setting yourself up for success, putting those business savings and the tax savings away, and having the rest for yourself.
Yeah. See a little bit how organized and purposeful this is? Intentional, right? So remember, you're a sole proprietor right now, so your personal and business accounts, but you should have a business bank account. And you should know your expenses. Now, you're independent agents, most of you, I think, yeah. So you're all independent agents and fairly new. So you don't have a whole bunch of expenses, right? You got like a monthly fee here, you got some MLS and car dues, right? SAR car and R dues, maybe some gas and mileage, right? But you don't have a whole bunch of expenses, right? So have you actually penciled that out, how much it costs you every year? I bet you guys don't know, huh? You guys haven't actually worked that out. Well, if you knew, then you know what to put in your bank account. That means every check, if you knew I need $1,728 every month to pay my bills for my business, then you know how much every check you need to have in there. And that means if she got another check this month, she could bypass putting money in there, put it straight to her personal account. Unless she wanted to maybe build up more months. Maybe I want 3 months in reserve. Maybe I want 6 months in reserve, right? I want to be able to pay my bills for 6 months or a year. So she could do that into her business. But you need to get serious about your expenses. I can tell you, between the monthly fee and the other thing, it's gonna turn out to be about $2,000 just in MLS dues, EP, and SAR dues, and a monthly fee, E&O here to pay your dues. So that's $2,000 a year. How much do you pay in gas per month now? Do you charge that to your business, right? How much do you pay for business cards? Do you pay for anything? Do you pay for leads, right? So all those things need to be budgeted. And if you have a budget, then you always know what you need to put in your business bank account, and then you know what's paid to you. Right? And then you see immediately, because the government bills you on your net income. So she got a check for $5,760, which is her gross income. Then she kept $1,728 to pay for expenses on the business, and she made $4,032 on that check. She knows I'm going to get taxed on now $4,032. Right? And what she do? Puts some in her tax savings account, puts the rest in her personal bank account to pay bills. And then she sliced that. There's a self-employment tax and a state and federal tax. So you guys both agree this is a better way to go?
Quick
Yes.
question, so she put down 40% of her net.
Correct.
Is that a smart move to do, always 40%?
I would recommend, if you want to be conservative, 40% is net, because remember, you have both state and federal tax in California. Even if you are poor, you're probably, well, not that poor, you don't want to be that poor, but if you're making a decent wage in 40, 60,000, you're probably going to pay somewhere on the order of 20, 25% of your income for federal tax purposes, of your net income, I should say. Then you're probably, there's a state tax also that ranges from 6 to up to 13% on top of that. So if you kind of add those together, roughly 40% is a good measure. If you're making a lot of money, your multiple 6 figures is probably going to be closer to 50%. So just note that. So she puts out 40, and I will say this, as an independent contractor the IRS has, and I'm not a tax advisor, so this is only from experience, you have a self-employment tax of 15% of your income in addition to state and federal taxes, and that's why they put 40. The reason you have a self-employment tax of 15% of your additional income is because you are not a W-2 income earner, and you don't write a check. No one contributes to your Social Security and Medicare and unemployment and all the things that the government makes everyone pay so that they can pay you out later, right? So to do that, what they do is they charge a self-employment tax, and they take that money and apply it to your Social Security and earning wages and stuff like that. So, and if you know, it's about 15.4%, 14%, something like that. And the reason is that if you were a W-2 employee, I don't know how many have had jobs prior to this where you were a W-2 employee, you got the taxes taken out, right? You were paid taxes and deducted, but actually you were only paying half the taxes. You were paying about 7.5% of the taxes. Your employer was paying the other half for you. So half that. And then that would total 15. But you have no employer now. You are self-employed, so you're paying the full 15%. So that's why we recommend 40. You don't have to put it in separate accounts. You can just put it in the tax savings account. But we recommend 40 because you'll have your normal taxes plus your self-employment tax. And then once you get bigger, and what I mean, you can actually have an account that can fund your, pay you a salary. So literally you're making enough money that every month you can withdraw $4,000, right, as a paycheck. Make yourself a paycheck. That's when you start saving on this money, because once you pay yourself as a W-2 employee of your own business, this goes away. Right? So there's some, that's why the tax advantages happen. Now, you will still have to pay, remember, 7.5, 7.5, but now you're an employee, you're paying 7.5, 7.5. The 7.5 that you pay as a business is now tax deductible. So essentially, you have that tax off, because now you still have to take 7.5 out of your paycheck, but you don't see it, but the other half is now the business paying. Now it becomes a business expense, which becomes deductible, right? So that's part of the reason you want to get big in this business is you want to get it, but I wouldn't start a corporation till you're probably about $80,000 to $100,000 in income, I would say. So. Any other questions?
When you're tracking mileage,
Yes.
let's say I went to a showing, it went straight home, how would you write that down?
The government would say it's only to the showing, so. But I doubt they're going to track it that far, right? So. Yeah. So. Okay. Any other ahas or questions with this?
I do have a question kind of pertaining to this, but have you heard about the Social Security because of the pandemic and how much money they put out for stimulus checks that oh my gosh, I just totally blanked. What is it called? Social Security will kind of be diminishing over.
That it will not have enough money.
Yeah.
That has been the case for, I don't know, as long as I've been
We'll
alive.
be talking about that forever.
Yeah, I'm talking about.
It's
So is it not funded
always-
is it not funded enough? Yes, right now it's very diminished because government over time steals things, money from it at times, because it has a lot of money, obviously. And also it depends on, remember, so workers now paying for the retirees now. Baby boomers were really big, they're all retiring, really big in numbers, I should say, population wise. The next couple generations, which I'm a part of, and maybe some of you are part of, are smaller, much smaller. And so these workers are trying to support the baby boomers. So there's always stress on the system now. I think they're like, we only have 20 years left and it's gonna start, not that it's gonna go bankrupt, but that the benefits have to reduce, okay? And then, but then millennials are very big, almost as big as baby boomers. So once we get through baby boomers, it will sort of balance back out because now we have a lot of workers on the millennial side. But having said that, the government is very loath to reduce Social Security payments to seniors because they will be voted out of office very quickly if that happens. So I'm not too, people are naysayers about it, but I'm not too personally concerned about it because in the end, when it means your political future is at stake, then most politicians will do things, vote on things to make sure that that doesn't happen, right? So, with that said, if you could have a retirement that isn't based on Social Security, and it's just a bonus, how awesome is that, right? So, and you can see, we can get into that as you get closer to retirement if you want to start talking about what that looks like and things like that. But that'll be with your financial planner and that discussion. But I've had that discussion with our financial planner related factoring when we get access to Medicare for medical costs and things like that to offset costs, right? So you can get pretty detailed on that.
Since we're talking about it, as a sole proprietor, is there an option to do like your own 401?
Yes, actually, you can, and if you're on the Agent Financials class, you could see that. You talked about a solo 401k. So we all talk about retirement 401k. You can actually do a solo 401k, which is pretty awesome. And actually you can do a SEP IRA too. So if you have profit, you can do a SEP IRA, which is a self-employed IRA as well. Which I would recommend once you're consistently paying the bills. A SEP IRA is, or a solo 401k, is you can put up to 25% of your profit, your net income that you claim on your taxes, into a SEP IRA or a solo 401k, and that would diminish your income. It would deduct off, it wouldn't be counted as income, essentially. So if you made $100,000 net and you had profit on your business, you put $25,000 into a SEP IRA or solo 401k. Now the government will only tax you on $75,000. But that $25,000 must go into a retirement account that you cannot touch until you retire. Well, you can pull it out, but there'll be penalties to that. But
So do you have Roth options?
you can do a Roth option as well, which is after tax, meaning you don't take it on the front end, you take it on the back side. That means I get paid the $4,000, but then I put it in there instead of deducting it out of my $4,000. So Roths tend to be more sexy it means you don't get the tax deduction now. That means I had 100,000, I put money into a Roth, that now I'm only taxed 75,000, that goes away because it's an after-tax contribution. That means I have to take tax on all 100,000, and then I put the money into a Roth. Now, the good part, what people like about the Roth is, here's what happens. When you put it in a tax total 4K or SEP IRA, you get taxed when you pull it out. Because you gotta get taxed up here, you get taxed when you pull it out. And the idea is, when you pull it out when you're retired, you have a lower income. So, it's different, you're in a lower tax bracket, it's much better, right? Roth IRA is, I paid the tax on it now, so I don't have to pay the tax on it later. And so a lot of people like that because then you can get non-tax growth in that Roth IRA. Unfortunately, Roth IRAs are not an automatic deduction from your payroll. It has to go after you got your payroll and you put it in there. There are caps on a Roth IRA. You can only put, and depending on your income, you might get capped out. You only can do about 6,000. Well, I have to backdoor. I don't even qualify. I have to backdoor them, which is a whole other story.
Do you have a preference like Vanguard, Fidelity?
If you like to handle it yourself, I know like Luke's on top of his finances kind of guy. Vanguard is a good one. They're fairly cheap. They're kind of like a do-it-yourselfer kind of. But if you don't like that, I have a financial planner. We have some complicated things, so he makes his fees. I don't care. It's sort of like a realtor. He makes fees off of his investments, and I don't care. So I do that. Do I pay more? Yeah, probably. But I don't want to sit there and manage all that. I don't want to manage my Roths. I don't want to manage my 401ks, right? I don't want to do that. So just depends. And they might be able to help you on certain things like backdooring a Roth IRA. Like by law, or because of me and my wife's income, we don't qualify. Like I'm not even allowed to put money in a Roth. I'm not even allowed to put it.
Really?
I'm only, yeah.
Makes sense.
They don't want to give you, I lose that benefit because I said, you have enough money, you shouldn't get more benefit from the government, essentially. So even on the IRA side, so it's just a regular IRA pre-tax, I only can put 6,000 a year, 500 a month, that's the max I could do. So, but there's a backdoor method that after a year, you can roll over your IRA into a Roth IRA, you just have to pay the taxes on that year, $6,000. So, but actually the government was trying to close that loophole recently, so, but they haven't. But every year we backdoor them wrong, but I have to have my financial planner. But that's high-end, that's complicated, I'm at an income where you try to find these tax holes because you need to get them, right? So. But don't worry, you have lots. But the good part about the SEP IRA thing about this, you can put 25% of your profit or solo 4K into the retirement fund, which deducts from your taxable income that year, right? 25% up to $150,000. So if you made $500,000 this year and you had a SEP IRA, you can say at 25%, I can put $150 every year into my retirement. 10 years, actually 7 years, you'd be a bona fide millionaire, right? So think about the power of that. And actually, you can actually make that SEP IRA. You don't have to go to a financial planner. You can go do something that's called self-directed. You can put it with a company that's a self-directed IRA, and you can go invest in rental property with that money if you want to, and you control it, which I know Luke would love because he likes controlling.
How do you know this so much? Who's talking?
So there's a lot of possibilities for wealth building and tax savings at the same time in this business. But you have to have the income. You notice everything I talked about was based on commission income, 6 figures, those sort of things, right? So those dreams of getting to where you want to be require you to be consistent in sales first, right? And I want to note that because everything we're talking about is awesome until we get to the actual other part, which is actually doing sales, right? So, but I want to note this structure is something that as a self-employed sole proprietor right now, you should be looking at something that looks like this, where you're saving a certain amount of money for your business to make sure you can pay your bills, and then you should have some sort of budget around there so you know what you have to save. I would recommend you get at least a 6 months of cost savings in there if you can. So that means try to over time build a reserve in your business that is about 6 months of costs that you know every month you're gonna get on your business, right? And that may be gas, some food, MLS dues, monthly dues, right, those sort of things, right? So you wanna get that in there so that you're aware of that. And 6 months is pretty good. That means I can survive for 6 months without a commission coming in to make and my business will still run without having to backdoor my money back into the system. So, of course, if you're more diligent, you can do, but 3 to 6 months I do recommend. Okay. Whew. Any questions on that? Any other questions? You had some great questions. Any questions online? Sorry, I've been throwing a lot of stuff out. All right, financially sound business example, number one transaction, 9,000 fit, expenses accounted for. So we're gonna go to MRE models now, which is your next page in your thing, economic model. So there's an economic model, and I actually made this whole spreadsheet in Google Sheets because I like playing with it, but this is what we call the 30-30-40. All right, so Gary Keller and the Millionaire Real Estate Agent book, part of one of his models is the economic model, and he talks about 30-30-40. That means the big real estate teams that were highly successful in profit should go toward a 30-30-40 model. That means you have 100% of GCI income. There's a cost of sale. What's a cost of sale? This is a financial term. We know what a cost of sale is.
So what it took to procure the sale?
Correct. So these are costs. They're not expenses. So getting gas in your car is an expense, right? Because you got to do it no matter what. But when you close a deal, you have to do a commission split with the office, right? So your commission split would be a cost of sale because you only pay it because it closed. So it's costs that you incur at close because you have to pay it, but you only pay it at close. So if you pay a TC fee, that would be a cost of sale because it only gets paid at close, right? So think of cost of sale or things as, because you're a real estate agent, you have commission splits and TC fees and other things that have to get paid. Anything that only gets paid at the time of sale because you're doing the sale is considered cost of sale, which most of the time is going to be your commission splits. Okay. And then there's operating expenses, which is your MLS. That means these expenses happen whether you do a deal or not, right? Your gas, your MLS dues, all those things are on operating expenses. And the ideal is to get a net profit of 40%. Now, I will say this, as an independent agent, you should be a lot better than this. You should be able to keep your operating expenses and your costs up pretty low. I mean, at our office, it's 18, right? 15 cap, 6 cap 3, so this is going to be like plus TC fees, so it's going to be maybe 18-20%, right? With TC fees included. This you can keep. I mean, what you got MLS dues, which is 2,000 SAR and R&R, and gas. Well, gas is a lot right now. Food or something. You take clients out to lunch while you're showing or something like that. So those you can keep pretty thin, actually, right? Thinner. This is really like a real estate team. So my level of team, I work for this, and I can tell you it's hard. Like hard especially when you start adding salaries, it's hard to maintain this split, right? But you want to always make sure that you're at least, if you want to be sound, you should start tracking this. So when you do your chart of accounts, you're going to have certain things that are cost of sale, and you can break those out. So you'll have your gross income, so you'll have commission income, and then you'll have cost of sale items, and the cost of sale are going to be, you can put, if you really want to be super detailed, you can put, office splits, Katie Barrow royalty, and transaction fees, other fees, right? And then put those out, and then you can put also concessions. So if you give a credit to a buyer because the seller didn't want to do that repair and you want to make the deal go through and it's going to be extra $500, you said, I'll just give you the $500. That's also a cost of sale because you incurred that cost to make the sale happen, right? So you could have something, I have a cost of sale called concessions. And it's whenever we're crediting something to the buyer or seller at close to get the deal done, right? And operating expenses would obviously be your standard stuff. So if you have a standard commission check of $10,000, which is not too far off of our average is a little above 10, almost 11. It's gross, I should say. 3,000 costs, 3,000 expenses, 4,000. So you see, they're doing 40%, and then the tax is on this. The tax, remember that 40% tax? So I want you to see how tight your commission gets, right, over time. Now, that's why I say it's important to cap, because if you cap, this goes away, right? Right? That's why you see, I say agents, the first thing you gotta do is get to cap, because you wanna make sure that goes away, and that makes these numbers a lot better. Right? Questions?
How long does it take to make a cap?
How long? As a new agent?
Be realistic.
Okay, I have a lot of agents that do 0 and quit, and our rookie of the year, the last 2 years, 17 deals, 260,000 income. Rookie of the year last year was, I think, 15 deals, almost 200, 198 income.
Nice.
That was the rookie of the year. So there's, in our office, it hovers around 4 to 6 deals on average. 6 deals will not get you capped. 8 to 10 will probably cap. So if you had the goal of 1 a month, you'll likely cap. Or actually, I'm pretty sure you'll cap. The only thing that determined the rookie of the year from that one was they actively lead gen. That's all. That's the only thing. They were just methodical about lead gen.
Were they on a team or solo?
Both were solo. The one 2 years ago, she was rookie of the year. She was also rookie of the year for, which is Jenny Sapien in our office. She was working full time the whole year, so had another job full time. And she won rookie of the year for the Northern California Hawaii region, and she was #1 in the whole region.
What was this?
Jenny Sapien.
Oh, okay.
And then she also won the California Association of Realtors Rising Star Award, which they give it to the top 20 or 30 new agents. She won that.
That's awesome.
While working full time. So I don't want any excuses. And the thing is I find most agents have the problem is they focus on all the other things besides lead generation. Focus on learning, which is not a bad thing, focus on learning, but they just don't put out the signs and do the open house and talk to people and get good at drop flyers. Try to make appointments and get good at scripting and talk to people, right? They just don't do those things, right? So, and I know it's scary, I get it. Talking to people is scary. But if you think you're gonna Facebook or Instagram or TikTok your way to success, I think if you were at the last 2 meetings, you saw how much the teams, how much effort and time and staff time they put in just to get a branding presence to social media. That's what you're competing with. So just know. So, any questions on this? This is known as 30, 30, 40.
What's the average amount of deals for somebody on a team to cap? I know it cuts it down to 8K.
It's about 10 to 12.
10 to 12.
Yeah, but that's a little hard. So if you're on a team, remember, say your team's on a 50-50 split, that 10,000 gets, 5,000 gets chopped off right off the top, and it's 5,000, then 30, 40. So you see how it's a littler income, but on the teams, you're gonna make more volume, right? It's a volume-based operation. So think about this. If you can do what, you're on team now. So the team is giving you opportunity, they may be giving you leads, they may be giving you coaching and mentoring and accountability, right? If you can do those things for yourself, you don't have to get it. And that's where the difference, honestly. People end up teams is they can't self-discipline themselves to do the lead gen. And then the people that make it as individuals self-discipline themselves to do the lead gen. And honestly, the big teams, all they do is they got so good at lead genning, they have more clients than they can work with. That's really what happened. That means they got good at whatever they like to do to find clients, and they got really good at that, and now they have more people they want to work with, and so they have opportunity to hand that to other people. But they're going to get paid on it too, right? Because they're generating that lead. You can see how important it is to generate that lead, where agents are willing to give 50, 60% of their commission just to get a lead. So if you can self-generate that yourself, you're saving yourself all that money, but you got to be self-disciplined. Such the intentional journal.
Is that called the intentional journal?
Intention. Any questions here online? Fine. Let's keep moving. Hold on one second.
You happen to have Kleenex?
Kleenex. Oh, you should, oh, there you go.
Thank you.
All right, we're gonna talk about the flow of money.
I'll need half of me on these back.
No, go ahead.
Thank you.
So we have, think about your flow of money. You get your income, expenses go out, profit is what's left. But I think you should ask yourself these questions. You should start with, what's your profit goal? How do I minimize expenses so that I get the income I want? So I run my business this way. We call it Profit First. And there's a book, Profit First, great book. And where it says, the goal of business is profit, and no matter what you should do in your business, you should always make profit. And the way you always make profit is, every time you get a check, you take home your profit. And then you make your expenses to fit what's left over. What if you took that check and you got that $6,000 check, and you say, my income is always $4,000, and I took $4,000 every time, and I left my business $2,000, and I always made my expenses fit the $2,000, no matter what, if I had to cut things or I had to do things, I left it at $2,000. Actually, so I run that on my business, actually, on my team. So we say, I take profit out at a percentage right off the bat. And my assistant may say, hey, we're gonna run out of money in the operating account that was left there. And I say, great, go cut something, because we're not spending that money. Now, there's some exceptions like payroll, but there's certain things you can, as a sole proprietor, honestly, there's a bunch of stuff you could be more frugal on. Stop eating out so much. You know? Take a coffee cup from home instead of Starbucks. Right? Charge, right? So,
I have a question. What was
Yeah.
that book written by? Was it by Mike?
Michalowicz.
Yes.
Yes, Profit First was written by Mike Michalowicz. And this intentional journal, which I said is a 90-day sprint, which I do every 90 days. About my whole team this or doing this. My real estate team and my leadership team is doing this. That is called the 12-week year. But great book as well.
12-week year.
12-week year. So I think you should ask yourself some questions, right? How much money do I want in my bank account at the end of the year? How many houses do I have to sell to make this work? How can I minimize this to make this happen? Right? So traditional bank accountants, CPAs, tax guys think of income minus expenses equals profit. But you really need to flip your mind, and if you run it this way, you'll keep your expenses in check. Because one of the biggest problems agents have is they can charge up the credit card like no tomorrow. Right? There's plenty. As you can tell, I'm sure you get spam called all the time from vendors trying to sell you leads and promise you things all the time, right? And so you can sign up and start spending a whole bunch of money where this gets flipped upside down, right? So you need to make sure you keep your expenses under control. I can assure you. If you're a sole proprietor, you got a prospect. You're not going to market it. So anytime you're going to spend money to get leads, that means you're marketing. That means you're trying to spend money to get people to come to you, right? If you want to be cheap in your business, or frugal, I should say, you need to prospect. That means free stuff, open houses, door knocking, phone calls, free posting on social media in a purposeful way, right? Those things are all free, right? So, and you should be focusing on those activities initially. Income for your real estate is commissions earned. So remember, you should categorize your income from your business in separate ways. It should be listing income, sales income, referral income, and leasing income. Now, none of you, leasing is more a commercial thing, right? So you wouldn't have that category necessarily. But you want to, in your books, in your, where you're tracking, you want to track your income. Listings as listings, obviously. Sales are buyers, right? Referral is if I referred out someone to another agent and they paid me a referral fee, right? You want to see where your money is coming from. So cost of sales, we talked about commission paid out, growth fees, commission splits to pay independent contractors. If you have to pay a referral fee because someone referred you business and you closed in your pay referral fee, that would be. Yeah. Digging into, so we're gonna get a little formula, so bust out your pen. We're on page 9. Dig into cost of sales. So you're not capped yet. You close the transaction, if you see at the bottom half of there. You close the transaction at 3% of your GCI, which is $9,000. You're not capped yet on company dollar royalty. What is your commission check? So, see that formula? That first box, put your GCI, which your GCI is what? $9,000. You all know, right? Now bust out your calculator. Company dollar. So what is your 30% of your GCI? And those of you online, you just have that workbook, page 9 at the bottom half here.
You said what's 30% of that?
30% of 9 is what? 3,000? What?
27.
2,700? Okay, so minus 2,700. Your royalty is 6% of the commission. What's 6% of 9,000? What?
540.
Okay, and you take your gross minus your cap and your royalty, what do you get? And that is your net. What?
5760.
5760, you can see why that we did that formula. So 5760, so your average net on a $9,000 commission is going to be $5,760 if you are not capped on either your cap or your royalty.
Quick question, what's the cap for the royalty?
3,000.
Is that same for a team? Or is
Yes, that is same throughout KW, right? The cap on a team is 9 and 3. If you're already capped on, now number 2, everyone understood that part? All right, number 2, if you're already capped on royalty, but have not capped on company dollar, you'll generally cap on royalty before you'll cap on company dollar. It probably takes about 3 to 5 transactions to cap on royalty. So, what is a commission check now? So you have 9,000 gross.
8460.
8460. And then what's your cost of sale on if you're capped on both? 0. It's $9,000. That's a beautiful thing, right? So you go all the way from 5,760 to 9,000 per check, right? So you can see the importance of capping. And I tell people, the reason you got in this business is you want to at least, if you're going to want to at least get to a point where you're providing, you can make it a full-time job. And I'm providing income to my household and my family at a rate that I can pay my bills and we're sort of comfortable. You're going to have to at least get to capping. That means 10 to 12 deals. And you're gonna feel like, okay, I can pay my bills. It's not super great. I'm not like, buying a Ferrari, but like, I can make it work. You wanna get to at least there. So I would gun very, very hard, dig hard to get to capping. That means scrounge to get those 10 to 12 buyers or sellers, right? So, and they're out there. I mean, right now it's crazy, right? So like you did an open house, 28 people came by, right? So got 2 appointments, right? So
28 just from the signs.
just from the signs, there you go.
61 total.
61 total, 28 from the signs, right?
15
So,
from the flyers.
and how many appointments you got?
Got 2 appointments, and then I got 2 buyers' phone numbers and emails from just inviting people to the open house.
Very
We're honest.
So you have 2 potential leads and 2 appointments, right? And you did,
And 1 seller lead that Bobby has an appointment with already.
oh,
that I had
okay,
not
so
done.
3rd listing lead, so really
And I
3
didn't
appointments
send that to them.
from, and you found the open house and prepped on it, right? Or probably an hour.
Well, they gave it to me.
They gave it, but it's probably an hour. How much did you prep, like getting ready flyers and stuff like that?
So flyers was quick, half an hour.
Okay, so half an hour, then you actually went out there and walked it.
3 hours door knocking,
Okay, so that's 4.
1 hour dropping 100 flyers.
Okay, fine.
So during the 3 hours, I door knocked and handed out 100 flyers, and then I spent an hour dropping 100.
An additional 100, right?
Yes.
And then you put up signs and did the open house, right?
Signs were like half an hour, put them up, half an hour, take them down.
So an extra hour, and how long was it?
Open houses, we spent, let's see, 3, 4, 5, I think I spent like, so Thursday was 4 to 7, so that's like 3 hours.
Oh,
Friday
so it's 2 open houses.
There's 3 open houses.
Okay.
But I think it was like 12 hours or something.
Okay, so we got 7 to 12, so 19 hours of work, 19, we'll say 20. So part-time job, 20 hours of work a week, right? Part-time. You did 3 open houses, got 3 appointments and a bunch of other leads. Now, we know our average is 9,000 to 10,000 a commission, gross. Even net, even if you have to pay all your stuff, it's $5,000, something, $6,000, right? So 3 appointments is potentially $18,000 net, in your pocket. For part-time work. Part-time work. Isn't that why you signed up, right? I want an easier life, flexible schedule, good income. But you gotta do the work. Now, did it suck putting out the signs 3 times?
To me, it doesn't bother me, but to some, yes, probably.
Driving around, probably put it out, right?
If it's either raining or it's really hot, then yeah.
Or the big intersections where you gotta like park on the corner and walk walk the corners.
Exactly. Those are the painful ones.
Those are the painful ones, the big corners, right? The
Everybody
big
looking at you
intersections.
like, what are you doing?
Exactly, you're walking around looking stupid, everyone's waving
Massive
off,
signs.
your cars are carrying signs, yeah, exactly. I don't do that.
Especially if you're dressed up. And
Exactly, you're all nice, like carrying signs, sweating, it's horrible, okay, I get it.
this is what rich people do, okay? I'm just carrying signs.
But you can see that the only advantage that Luke had being on the team was the open house was offered to him. But I could tell you, you could have spent 30 minutes texting and calling agents and would have got out. So I could have just added a half hour onto what Luke did and you would have the same exact result.
There's a Facebook page we can ask for as well.
Yeah, exactly. You go on a Facebook post and ask for them, right?
I actually texted Jenny and asked her if she had any open houses, and she was like, no, but you can go on the Facebook page and ask. I'm like,
Yeah, there's a bunch of you like, I have open houses, right? I used to just do areas, I would literally open Metro List, do a map, and I didn't like putting out signs. So I always went from 2 intersections to the house. I always wanted 2 major intersections to the house. So I would pick houses that had that were closest to 2 intersections. I didn't care about the house. I just wanted 2 intersections, so I put out less signs. And it works, right? And I just did that all the time, and I would just call. And I called listing agents who were in Roseville or in Bay Area, because they're not open house in the house, right? So, hey, I'll do it for you, right? So.
Where I got on the inspiration to put some of the signs out was from Kim Puccini, actually.
Yeah.
She was the listing agent on the first deal I got. And she just told me straight up, she's like, get you tons of signs. And she said, we put them out early in the morning, put the times of the open house in the front yard, and tons of people are gonna drive by all day,
I just, yeah.
and then they're gonna come back later when you're there.
I'm telling you,
And sure enough, it works.
I don't think you should do it. I fundamentally believe you should do an open house sign with a minimum 20 signs, minimum. I can't do an open house of signage that I like, the amount of signs to get all the directionals where I want, without 20 signs. And even then, I'm like, well, sometimes I'm short, right? So.
I think more intersections than signs is more important.
Correct, I agree.
I've noticed driving around to different open houses, how many signs, agents don't put out, and then I have a hard time finding the house.
Yeah.
And
So we recommend putting it at every time you have a chance to turn. If you actually do that, you're gonna put out a lot of signs. But I do, intersections are big. So I don't mind doing open houses in the county because it's all major roads. It's all squares, right? Major roads. So you can do like 3, 4 if you have one in that square, right? So, but you gotta get the signage going on it. But yeah, I don't really care. I did homes that were not new. I did homes that were old. It doesn't matter because people come from the signs. And those are the people who want the online people have agents. You want the walk-ups, right? You want to drop the flyers. If you want listings, drop flyers, knock on doors, because then the sellers will come.
It's a really easy script. It's just like, I just want to invite you to the open house, boom.
Yeah, I had people before, we did that, we still do that on our team. I remember I was doing it, and it's like, I remember this guy had a security door, it was open, I could tell, but you can't see through it, right? He's like, oh, what you selling? I'm not interested. I'm like, okay, I'm just selling a house. He's like, oh. I was like, I'm selling your neighbor's house. I know you probably want to know how much it costs, right? He's like, yeah, I do. I said, I'm just sticking it in the door here, right? I literally, was one of those guys, just stuck it, I'm just leaving it right there, sir. Have a nice day. He's like, all right. Shows up at the open house, right? Unlocked, got the listing, right?
Oh, nice.
So you just gotta walk and talk to people, right? So you never know, you never know. All right. We did our formulas, okay. Everyone
Quick
understand
question
this?
on the open houses.
Yeah, you wanna know how much to sell them, because why does someone walk into another person's, oh, you got a
Your
question?
brother's also saying something.
Oh, sorry. I had an open house question, if that's okay.
Yeah, go ahead.
What times do you find it best to do them? Because I've been doing, like 11 to 2. Do you tend to get more traffic if you do it later in the day?
I find Sundays, you definitely gotta start afternoon, because you gotta wait for church to get out. You gotta
Mhm.
wait for church. Saturdays are hit and miss. I can have good, it depends on the weather, but I can have good 11 o'clocks too. But my ideal time is 12 to 3, but I have done 11 to 2, but I like 12 to 3 better.
Okay.
And I think traffic drops off after about 3, although you can stay to 4. I've done 12 to 4, which works too, but those are my best times. And I will say this, time it. Like, I know the parks in Natomas that host the soccer and little league. They have the diamonds and they have the fields. And I know, like, I live across from a park right now that on Saturday, man, it's like packed the whole day because it's little league nonstop, right? Game after game after game. One time. There's one in Natomas Park here on the other side. They have 2 soccer fields and man, it is packed Saturday. And so what I would do is I know when those ones are packed and when they're doing it, I would try to do open houses there because literally you can do one because the parents are just sitting there. And if they have 2 kids playing different age groups, oh my gosh, between there, they're just like walking over. You know how many people I got just walking in with their kids in uniforms, still in cleats? Right? And I would get, those would get one open house, 60, 70 people because you're just right there. So think about 3-day weekends. You think that everyone's going away, but they can be gold in 3-day weekends.
Thank you.
How do you handle I'm sorry.
Go ahead. Would that answer your question, Riley?
Yes, thank you.
So how do you handle getting overflowed sometimes?
Ooh, that is a tough one. That is a tough one. I block the door. Honestly.
What's the password?
No.
Your phone number is the password. What was that again?
So this is the door to the house, right? I'll usually say this is the door to the house, here's the living room and kitchen stuff out there. I'll go place a table here, kind of that. I'll place a table here, tablecloth, and I have all my stuff. And I literally stand here, and I'm about 4 feet away from the door. So when someone walks in, I say, hey, how's it going? But I keep them here, hey, you gotta sign in. But I'm standing, you can't get past me. To get in the house, you have to get past me, sign in. And I'm not being mean about it. I'm being very standoffish. Usually they'll come in and I still have 4 feet to 5 feet of distance between us. I'm asking them to sign in. But I do that because subconsciously people see, they don't even know they're seeing it, but their brain's telling them I need to sign in because I'm blocking the way. It's just a natural human reaction. So I don't get people are like, I got a lot of sign-in directions. I don't get a lot of sign-in directions because how I set up the entrance and how I do it. So I do a lot of that. And then I let them go. I said, the house is here, blah, 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 and I let them go. Now I have a script on the back side. But I'll still stand here. So somebody may be signing in. I'd be like, hey, stand in. Can you sign in? I'll be talking to someone, say they came back to the house. I'd be like, the house, we're talking. Someone walks in. I'll just be like, hey, here's the house, here's the sign in, blah, blah, blah. I said, 1 second, blah, 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 give them to it. And I stay right there. And if they come in, they kind of have to scoot over, they kind of go around me. I scoot back. And I stay right there and talk to my people. And what happens is it gets a little blocked up. So I'll have someone I'm talking to, and they're coming, and maybe I'm talking about down payment assistance. And I've had this many times before, where someone's walking up, and I'm talking about down payment assistance, and they interject in the conversation. Hey, I'd be interested in that too. I say, great, join the conversation. And I have 2 people I'm talking to at the same time, right? So now, does it get bad sometimes? Yeah, sometimes you lose people, and it happens. That's just part of open house. But you just need to be smart about how you handle your open house. And there's a lot of subtleties, that's all, there's a lot of subtleties to doing a really good open house. And most of it is, I wouldn't worry about the overflow so much, I'd worry about getting better at conversion. That's what I worry about. I'd worry about setting up my dialogue and everything to convert to more appointments, because that's what's gonna matter most. That's what's gonna matter most. Build the future, plan the future, okay. We're gonna be on page 10. Net profit goal, what's your net profit goal? What's your net profit goal? How much you wanna take home this year, annually? How much you wanna take home annually? Write it up there on top. This is your choice. You choose. All right, times that by 0.6 on your calculator. Oh, times 0.6. I'm sorry, divided by 60%, divide by 60%, sorry, not times it, divide by 60.6. And you'll get a bigger number. And that's what you actually have to do in real estate sales, that's the commission you gotta earn.
Divided by 0.06? Or what is it, 0.6?
0.6. So you should take your net profit goal, divided by 0.6, and that should get your gross profit goal. Because that 40% we're taking off is for your taxes, right? So that's how much profit you need to make, so you can pay your 40% tax bill and keep the 60%. Then gross income, so divide the gross profit by 0.4. So that number you just got, divide that by 0.4. Everyone got that? Now, you should divide that number, your GCI, your gross commission income, divided by the average commission of income. So that would mean you can use 9, 10, somewhere around there, 8, 9, 10, or it's gonna be your average commission in the area, probably more like 10. So somewhere between, use a number, so 9, 10,000. Put there, you're gonna divide the GCI by that number, 9,000, 10,000. And what that number is there? That's the number of home sales you have to do. What? End of the year, end of the year, end of the year, end of the year. You're like, a month now. Yeah. And then anticipated cost sales, what's your royalty cap? Should be 18,000 unless you're on a team, and then it'd be 9 and 3, 12,000.
Wait, I'm sorry, I'm confused. You said the royalty cap was what?
The royalty cap is 3, and the company dollar cap is 15, so a total of 18,000. Anticipated cost of sale should be 18,000 in this office. And your operating expense budget, you should multiply your GCI, so go back up to the third line and multiply that by 30%. Everyone got that? Those numbers? All right, so that home sales number is the number of home sales you need to do to make the profit, the net profit take home in the bank. It's not the IRS money that I'm just borrowing from. I'm taking it home, this is my money. That's the home sales you have to do. Anyone have trouble with the math? Anyone have trouble with the number you put down? I'm getting different looks from different people on this one.
Shoot high and you'll get close.
Exactly, shoot high and you get close. Make sense? This is literally what I do in our team as well, so. I go off on that part, right? So. Any ahas from this exercise?
Those things in perspective.
Yeah.
Very
absolutely.
real perspective.
Very real perspective, and that's why I tell people, we hear about these rates, 25% quit in 1 year, 50% quit in 2 years, 75, 80% of agents quit in 5 years. And the reason is this. I can tell you right now, the reason is this.
I bet
It's
people don't
because-
understand.
It's because they do sales and they don't understand it, and so they think that 40% that the government's gonna take is theirs, and they start spending it, and then they get cramped, and they gotta use money from the next year to pay for that back, right? And they start borrowing Peter to pay Paul, and they don't realize where their money is, and they think they have more than they really do.
I can totally see how people get, like, I'm done, I don't.
Yeah, like, this is just, I thought this was gonna be awesome, right? I thought this was gonna be great, super easy. But that's why I tell people, you gotta get to capping. Because then one is you have some level of consistency in commissions, and two, you're starting to get those costs to go way down, right? The percentage of your costs get way low because your income's way up. Think about that. That's why I wanted to point out, Luke's 20 hours of work resulted in 3 potential commissions.
$30,000.
Off of 20 hours of work in 1 week. I mean, that's what you all signed up for, right? Even if you netted 15 out of that, if I said you could work 20 hours this week and net $15,000, how many would sign up? Every one of you, right? All you gotta do is do it. do it. So the difference between people who make it, who quit in 1 year or 2 years, is they just don't do it, or they don't do it consistently. People who quit in 5 years is because they don't get this right. They don't start treating their business like a business, and then they're always robbing Peter, pay Paul, have tax bills, and they don't think they're making all that money, and then it gets super frustrating. I just want to go to a W-2 where they pay the taxes, and I'm okay, and I get this regular income. They don't do that. So you want consistency, right? So, all right, we're a little over second. All right. So, sorry, best practices. We'll close with this. Gain clarity and reliance. Set your personal business budgets. Set up your business entity. That will be when you're a little bigger. Open additional bank accounts. If you're running your expenses for your business in your personal bank account, I would highly recommend separating that out. And you need to get a habit. This is the hard part. You have to have it. And if you have 2 debit cards, you charge your personal stuff on your personal debit card, and you charge your business stuff on your business. Makes sense?
Quick question. Is it possible to simply have a photo of every receipt versus saving the receipt?
Yes, you can have electronic version. IRS holds. And I've been through 2 IRS audits, and I've come out both clean, no changes.
What triggered the audit?
I was wondering that too.
What triggered it? 1 year, I didn't make as much profit. I had a lot of income. It was a bad year. Well, I made bad decisions, I should say. I made about $700,000 in income, but I only netted like 75. So IRS was like, you're claiming too much expenses. And then I just went there and showed them, no, I was just a bad business person this year. That's what it was. I paid too many friends too much salary, and that was all. Anyways, and then the second one was because I was flipping. And so I was making a lot of money, and they thought I was cheating the system. I was like, no, it's the recession, and I'm selling houses for 25% profit.
How do you claim that? I was gonna ask you that, like, if you're flipping, how would you?
So, anyone heard of capital gains tax? So capital gains tax, you get taxed, if you're a flipper, if you buy a house and sell a house within the same year, they consider you, well, if you do multiple times, they consider you a dealer, which is a whole other thing. But if you buy and sell a house within the same year, it's subject to short-term capital gains tax, which is essentially equivalent to your tax rate. So they just consider it income. So if you're at 40% total, well, that's not true. It's whatever your California and your income tax rate. So if you're at a 25 for the state, and well, you wouldn't be flipping, but if you're at 30 with the state and 30 with the feds and 9 with the state, then they're going to tax you 39% of your profit.
I thought it was 2 years, I think they told us in the other class,
What?
capital gains.
You have to live in there for 2 years.
No. Yes. So let's back it up. So there, yeah. He's saying if I flip a house, how they're going to tax me. I'm saying if you buy the house and sell it within the same year, or sell it within 12 months, it is subject to short-term capital gains, which is taxed at pretty much your income tax rate. So just consider it like I have a salary, I have a job, I sold this house, I made this income, I'm gonna pay the full tax on it, just like normal. You're talking about if I sell my owner occupied property, am I subject to capital gains? And there's a rule that says if you lived in the house 2 of the last 5 years, it is not subject to the capital gains up to $250 for an individual, up to $500 for $500,000 for a couple. Does that make sense? So if you want to be smart about this as an individual, what you should really do is go buy a fixer, move into it, and fix it up over the next 2 years, and then sell it, and then move to the next house.
Is
So-
that 1031?
1031 has to do with investment selling, that's to move the capital gains to a future property. So,
Just,
if I sell a house and I have $500,000 profit, I'm gonna be subject to capital gains, because I'm an investor, it was an investment price, a fourplex or something, right? I sell it, I have a capital gains tax due. And the capital gains is 0, 10, 20, well, they're trying to raise it now, based on how much income I claim that year, so. Anyways, I owe a capital gains tax bill. I don't wanna pay that bill, so I can 1031 exchange it into a new, but I gotta take all the money I make, put that into another investment property. And I have to do it within set timelines. If I don't do it with those set timelines, boom, you owe tax.
Quick question, so if you flip a house, you buy it, you fix it up, and you flip it, are you able to, use the expense of the remodel as a deduction for your
Of course, yeah.
short-term capital gains tax?
Oh, yeah, it's your net profit. But, it's your net profit. But if you make $100,000 on the flip, then your tax rate is 33%, that's 33,000 of taxes going to be owed on. If you're net, that means I profited from 100,000.
so if you live in a house over 2 years, you don't have to pay taxes on the money you made on it?
Long as your gain is less than 250,000 as an individual, or 500,000. So
And it's your primary residence, right?
it has to be your primary for 2 years, primary.
As long as your gain is less than 250,000?
If you're an individual, 500,000 if you're. So I buy a house at 200,000. I'm married. We live in it for 10 years. We sell it. I sell it for 500. Now I make 200 to 500. I make $300,000 profit. Right on the house sale. If I'm married, and now I have an exemption up to 500,000. I don't have to pay capital gains because I have an exemption up to 500,000. If I was single, lived at 10 years old, I only have 250,000. I made 300,000. I sell it. Now I have 250 free, but I have to pay capital gains on 50,000. Make sense?
So you said you take the money and you have a timeline, as to when you can put into another property.
Mhm.
You still have to pay the capital gains regardless? So if you did it that way, that route, you still have to pay your capital gains taxes if it's less than
If
less
it's,
than 2 years, so you flip it, it's less than 2 years.
yes.
and you get your investment money.
The only way you're gonna get exempt from that is 2 levels. One, if you wanna be totally exempt, you gotta live in it as a personal resident for 2 years. If you don't, you can 1031 exchange it, it doesn't reduce the capital gains tax, it just punts it to the next property. So if you owed a $100,000 bill, it just moves the $100,000 bill there. And if you have more growth on that one and it ends up 200,000 more capital gains, now that house has a 300,000 capital gains when you sell it. Make sense? So it just punts the bill down the road.
But it's smart to do that though, because you get a higher appreciation percentage, right? Like if you transfer a $600,000 house into another $600,000 house. without-
One is you get more buying power, which is nice, so you can upgrade your investments better, easier. 2, most people do this as a long-term wealth building strategy because something happens where you don't have to pay tax.
Certain age,
Now you die. So I have a family, I have kids, I say I have 20 properties. I have them all 1031 exchange, I built up this network and they're all 1031 exchange. I die, they all get reset to 0. To my kids.
So they don't have to pay any taxes.
Well, the basis gets set to 0. So what happens, this is complicated. Say I buy an investment property and I buy it at 200,000, and I sell it at 400. but I don't, it's an investment. I don't wanna pay the capital gains tax on the 200,000. So what I do is I take the whole 400,000 and I punt it over to the next house. And let's say I buy, now, say I buy an $800,000, I take 400 and I take a 50% loan and I buy an $800,000 property, it's making more income now. Now remember, I started at 2 and I made 2, right, on the first house. What actually 1031 exchange says, normally when you buy a house, your floor, your basis is set at 800,000. I bought at 800, it starts at 800, right? But when I buy the next one, if I 1031 exchange it, it says, no, you had a 200 base originally. It puts the 200 base on your new property. So automatically, you bought at 800, you have $600,000 in equity that will be capital gains if you sold that property in the 1031 exchange. Does that make sense? Because you keep that same 200,000 basis. Now say I do that 10 times. I'm gonna be at 200 on a multi-million-dollar property. It's gonna be a painful bill. Does it make sense? Now, when I die, say that final property that I 1031 exchanged it 5 times, I pass away, that property, say it's now, whatever, it's a $2 million property, right? And it still has that 200,000 tax basis on it. So when I die, that tax basis gets reset to 2 million. Now, if my kids, it goes up to 4 million, they'll still be subject to 2 million tax, but they won't be at the 200,000 basis, they'll be at the 2 million basis. So essentially at the time they get it, if they sell it right there, they won't owe capital gains.
So my in-laws last year bought a second home with a VA loan here in Sacramento. They're gonna be selling their home in Fairfield within a month or 2. Are they at risk of having to pay capital gains?
No, you can claim that exemption, the capital gains exemption for principal residence, every 2 years. Right, because you have to live in the house 2 of the last 5 years. So theoretically, every 2 years you can,
They haven't lived in it for 6 months though.
well, as long as they file their taxes. Well, I mean, they'll know because it'll be on the sale, so. Your IRS said they lived here and then they moved here, right? So, and here's your costs, right? So, cool. Okay. So you can file it with the government. But yeah, they could get exemption as long as they don't sell this new house in Sacramento within 2 years. They'll be fine.
Oh, I see, so they could wait even another year if they wanted to, they wouldn't have to pay capital gains, right?
2 of the last 5 years. They could wait
Because
3
that
years.
first house was, they lived in for years.
Yeah, so they could wait 3 years. Think about that, because it's 2 of the last 5. Even if they moved out 6 months ago, they could wait 3 years and still have a 2-year,
So what you're saying.
within the 5-year period, I had 2 years and I had 3 years where I didn't. So you can really wait if you wanted to.
My wife and I could buy and fix her, I could fix it up, live in it for 2 years, move out, buy a different house, rent it out for 3 more years, and then sell it 0 capital gains tax.
Correct.
That's what my buddy does. He just goes house to house.
Yeah.
Gets a
That's
big
what I
house,
said. If you're, now my family, I got kids, teenagers in high school, we're not doing that. But if I were single, I'd move every 2 years.
He has like a 5-bedroom house.
Yeah, I'd move. I just move. I don't care. I got 1 bedroom, contractor fixed the rest of the house, live in my bedroom, that's all I care about. So, but, depends on your lifestyle, depends on what you can accomplish and not accomplish. You do have to live within your means, but then I say, if you have people, then house hack. Get a duplex, get a house that can be turned into 2 units. That was a little off track, but it's still finances, so I agree. Any other questions? Oh, we talked about this other, download the MRA chart of accounts. It's gonna be really complicated. You don't necessarily have to, but if you go to KW Connect, if you go to command, and there's a KW Connect button at the top, you hit KW Connect, you search for the MRA chart of accounts, it will produce a spreadsheet that you'll download and it'll have the chart. It's quite expansive. You don't necessarily need that right now. If you open just a free account, you can just sort of build it as you go, just build expenses. You can put the commission accounts we talked about, like sales, sales commission, listing commission, referral commission. Cost of sales, you can put in, the cost of sales, you can put in royalty and cap, right? And then on your fees, it could be TC fees, MLS dues, those sort of things, right? So
Is it a Excel spreadsheet?
it is, I think so, I think it's an Excel spreadsheet. Then, yeah, you'll have to go into your software and there's one of your tabs and everyone who starts, there'll be a chart of accounts tab. You go in there and you can make it, this is an expense, this is a this is a cost of goods sold, this is an income category. And you build up your income and expenses. If you don't like those things at all, once you get some money, I recommend getting a good CPA that knows how to do real estate, and we can refer one. There's one that does a lot of our agents in the office. I do recommend, once you get big, you want to, like, I actually changed CPAs. I had a pretty liberal CPA when I started, and now I have a very conservative CPA. And I changed purposely because I'm big enough now to where I don't care any taxes I pay, I just don't want to get audited. Because if I have to audit it, I'm gonna open up 7 different books of businesses, and it's gonna be a big pain in the ass, and I'd rather not do that. So I have someone who is conservative. I may pay a little more taxes, but I don't care because I want to be conservative, right? So it just depends. The one that goes around the office is pretty liberal. Set dates to calculate, pay your estimated taxes. I will say this on this, you go your first year, you make some money. If you pay taxes on your tax bill, the next year, they're gonna make you do quarterlies. Because they're gonna say, you made all this money and you should have been paying us quarterly, but you didn't. So we're gonna set you up on quarterlies. So if you said, your tax bill was $2,000, they're gonna say 500, 500, 500, 500. And then you're gonna have to pay that quarterly, which is, every quarter you literally send in a $500 check to the IRS.
Do you find that people prefer to do quarterly over it every year, or
I
is it
hate
just
quarterlies,
kind
quarterlies are a pain in the ass. No, sorry.
of?
Pain in the butt, because that means I gotta have the $500 no matter what, no matter how many sales I do, that quarter. I gotta write that check.
So how do you avoid that exactly?
He's like,
How do you avoid that?
I get a little bit of penalty for this, but what I do, when I was an independent agent, what I did is, I went to my accountant before the end of the year in December, and I had all my stuff, I had all my softwares done and all my stuff calculated, so I just said, hey, here's my numbers, I think, I'm gonna end up at around this income, here's my expenses and everything. I have a couple more deals closing, but that's it for the end of the year. And I said, what's my estimated tax bill? And she would say, based on this, you're gonna have a $5,000 tax bill. Then I would make a payment in that year, tax year, in December, before the end of the year, the same tax year, right? So remember, we're doing 2021 taxes in 2022. So in 2021, in December, I would say, I'm making a $5,000 tax payment on my income taxes for 2021. And so when my tax bill comes out in 2022, it says 0. I don't owe any taxes because I already paid it in the tax year. So then I don't have quarterlies because I have a 0 tax bill, because I prepaid it. But if you pay your taxes in April, when you file, then the government says, we're gonna collect it through the year, so we don't have this again, so we're not, because essentially they're saying you're borrowing money from the IRS throughout the year, essentially. So I did that a lot of times. But then once you have a corporation and you pay yourself a W-2 salary, and you're doing that withholding for remember I told you, 7.5, then you don't have to have quarterlies, because you have an income that's already being with, and that goes to the IRS every month. So if you have a W-2, so now I get a paycheck from the office and I have my business, right? I don't even have to pay any quarterlies or any premium taxes on my business now, because I have a W-2 income that is paying taxes. And as long as the IRS is getting some tax money, they don't care. So the easiest way to get around it is get your business consistent enough to where you can open a corporation, pay yourself a salary. Now the payroll's happening and the payroll company's sending your money to the IRS, and the IRS is happy, they don't care about quarterlies.
So would that be the same thing as like a W-2?
Yeah, essentially what I do is I make a corporation that I own 100%. Well, let's get this. I have a corporation that's JD Realty Group. It's literally a corporation. And I'm an employee of my corporation. I'm literally a W-2 employee. I get a payroll check with the deductions and everything, Social Security. I get a payroll check from my company for me working on my company.
Now, how does the corporation pay the taxes? Because isn't there taxes for the corporation? Or not?
Yes, there are.
And that's
On the payroll, that's why you sign up for the payroll. If you go on the Wave apps, it's free. But if you do payroll, it's really cheap. It's like $10 a person. So literally you can do payroll through Wave apps. And what they do is they will withhold that tax money for you. Well, you hold it, and then that tax money gets sent to the IRS. IRS is monthly, state is quarterly. So, and it will send it for you. It's just ACH to the IRS.
for your W-2 side and corporation side.
Okay, Yes, for both sides.
Okay.
Yeah, so you collect some, you have employee
You
and
send
employer
that
tax,
both.
and you send that both. Yeah. Cool. That makes sense? And if you do that with your payroll, then you won't get hit with quarterlies. Paying your taxes. So you can see the advantage of getting to a level where you're consistent with a corporation, paying yourself a salary. Now think about this, say you make $100,000, you pay yourself $3,000, $4,000 a month. There's only $48,000, but I made $100,000 a year. That other $50,000, $52,000 left over, you could do what you call, at the end of the year, distribution to yourself. And that distribution is taxed at 20% instead of your tax bracket, which is probably more like 30, 35%. And if you make less than $300,000 that year, it's first 20% is not even taxable.
First 20% of the distribution, really interesting. I like it.
So you can see the advantage of having a corporation where you're making a decent amount of money, but that all precludes that you are making enough sales that you can pay yourself a salary. The government won't let you take like 4,000 salary and 96,000 in distribution. They'll flag you and audit you. So you got to have a reasonable salary. But because you're real estate agents and your business ebbs and flows, you can set the salary low, but you got to have some salary that you pay yourself all the 12 months. So 50% is a good mark, but you can go 30, so you get 3,000, 3,000. So I did 36,000, I have 100,000 left. I take 70,000 out of distribution. It's taxed at a whole different rate, not even on, and the first 20% of it is not even taxed.
So you do the 70,000 distribution and you only had 36,000 salary?
So I do 3,000 a month. And I make $100,000 profit on the year. I do 33,000 a month to me. I have 70,000 left over. Sitting in the bank, I distribute at the end of the year 70,000 to me.
20% of it is not taxed.
So whatever that is, 20 is 14,000. 14,000 is not even taxed. The rest is taxed, but it's taxed at a 20% rate, not at your income tax rate, because it's more like a stock dividend. Because when you open your company, you own stock, and you're paying a dividend.
When you do this, can you do this as a sole proprietor?
No, you must have a corporation,
That's not cool.
because you have to have a stock. You have to have stock.
No, I mean like the distribution and
No.
stuff. You have to have.
When you're a sole proprietor, the government doesn't see separate entities. You are all together as one.
So you can't do this distribution.
Literally, you could run one bank account where you pay your groceries and I'll put your commissions and all that, and the government's fine with it. There's no question about that. Now, it makes it hairy to figure things out, but they don't care. Once you get a corporation, say by accident, you have a corporation, by accident, you forgot, you used the wrong card, you charge your groceries on your business account, now you pierce what we call pierce the corporate veil. Now the government or someone can sue you and the government can come and say, no, you're treating your business like a business. You're not really a corporation, you're a sole proprietor and you're subject to all these taxes because you pierce the corporate veil. So when you get to a business level, you got to keep them absolutely separate. You have to, otherwise you pierce the corporate veil and then you may be subject to all those taxes, self-employment taxes, all that stuff. So that's why I asked you to separate the accounts now, because you need to get in the habit of, I have a personal account, I have a business account. You need to get in that habit, because when you get to the corporation, it's not just a habit, it has to be that way, or you're gonna have legal tax trouble. So, clear? Clear as mud?
I have one last question.
Last question.
Last question. So, if you're full-time, you still get W-2, and you're doing this on the side, I do my own taxes, so I was just wondering, like, in the future. Currently, I just do 0, and I've been putting in, like, at least even like quarterly, but I just don't wanna deal with the tax issues,
Yeah.
so I go 100 rather than 100 safe, just go extra.
Yeah, you
Make sure I
can.
don't know.
Well, essentially you're doing quarterlies.
Yeah.
Essentially you're doing it
It's like
without formally doing it, right?
Exactly,
Yeah.
because I just don't want a big tax bill next year.
Yeah, the thing is you won't get taxed as long as you're, if at the end of the year you get a refund, government doesn't care.
Right.
Because what they're concerned about is you living off their dime, right? They're concerned about you owing a tax bill because you incurred income when you should have been paying them quarterly, but you didn't. So for 12 months, you lived tax-free and you paid them at the end. So you use the government like a credit card, right? And that's what they don't want to avoid. But at the end of the year, you tell the government, if I didn't use you as a credit card, then they don't care.
What about, my the end of the year, I don't make X amount of sales, can they audit me and be like, okay, yeah, you had this job, but you didn't make X amount of sales, so.
You can't have the office?
Exactly, yeah.
No, you can always have the office as long as because you're a 1099 with a license, you can always have that office. Here's the thing that they don't tell you, it's like, you can make an office and deduct it and all that stuff. If you sell that home, that square footage of that house is not included in that capital gains exemption. That is considered investor property and is subject to capital gains.
Because you had an office in it?
Because you have an office in it. They don't, with the tax people, they don't tell you about that. But when you sell that home, say I'm claiming 200 square feet of my home as an office, and then you get all those deductions. When I sell that home, they're gonna say that 200 square feet, and it's a 2,000 square foot house, is 10% of the house. 10% of my profit is gonna be subject to capital gains, non-exempt, because I treat it was a business. It wasn't my personal residence.
So is it not good to claim that
Yeah, is it not good to do that then?
Well, it depends, if you're gonna leave and try to avoid capital gains, then you probably would not wanna use it.
I said it for 2
If you
years.
plan to sell, no, it doesn't matter, it's not the 2 years exemption. It's, what you're doing is declaring part of your house not personal space, business space. And you're taking deductions off that, so the government's gonna say, you can't claim personal exemption on that space for the capital gains because it's not personal space, it's business space. That's what they don't tell you, that's what the CPAs don't tell you. So. But it may not be big, it may be 10%, I made $50,000, 10% is fine. I'm subject to capital gains of $5,000, or 5,000 of my capital gains is subject to capital gains, 20% of that is $1,000, I have a $1,000 capital gains bill. Okay, I got, $1,000 in deductions for 10 years in a row before I move. Okay, that's okay, right? But I'll say if you're moving tomorrow, it's probably not good, right? So it just depends how much in deductions you're getting for that and how long you're gonna get that deduction and how much of that space is claimed on the whole house, so, before you. Does that make sense? Okay. All right, I'm gonna go to another meeting, so I appreciate all you guys. Thank you to those online. I hope you learned something. Be intentional about your business.